Good afternoon, folks. Welcome to the unnamed Joel and Geoff Lunchtime show here on this Tuesday. A rocky Tuesday, to say the least. I'm going to introduce Geoff Bysshe here. He's co-founder over at MarketGauge, works with our dear friend Mish Snyder and Keith over there. Geoff, how you doing today?
I'm doing well. I think probably like a lot of people hanging out, waiting to see what Jensen has to say.
Yeah, and what the earnings are. So, I want you to. Geoff's going to teach me some lessons today that I probably should have learned by myself. But before we get started, choppy, volatile week here. Yesterday, we were looking into the abyss under 6,600. Miraculous rally. Popped over 6,700 today. As you said, waiting on earnings from NVIDIA. But when we were on air, before we came on air, I was discussing with Geoff, trying to short the market this morning, and obviously a little bit too early with that call. But Geoff, you had a rule that you were talking about with your traders and stuff, is what always is a good key to a turnaround. So I'd like you to share that with the audience.
Sure. So I'm a big advocate of keeping it simple and looking at the price action. And one of those simple rules is that when a market starts to trend, a good trend doesn't trade underneath the low of the prior bar if it's going up. It doesn't trade over the high of the prior bar if it's going down. It certainly doesn't close over that prior high or prior low. And so I use this on a 5-minute chart. I use it on anything from a 5-minute up. 1 minute, actually, I could use it on a 1 minute too, but it's definitely more squirrely. But on a daily, absolutely. And so what we were talking about, and I think you can all see my screen.
We'll add that. Yep.
I'll blow up the now I'll blow up. These are the deck futures in the E-minis on the S&Ps. And so the trick to getting this to be easy is that you have to recognize that the market has begun a trend. And you don't have to be sure that the trend has begun. But if you look at the market this way, let's say we're at the top. We have the first day that it trades below the prior day's low here. Next day, we close below the prior day's low. So right there for me, that's my first sign that we might be reversing. From that point on, I'm going to look, or anytime, if we don't make a new high, then I'm going to say, okay, well, let's see if a trend emerges. And just look at this. We don't trade over, we don't trade over, we don't trade over, we don't trade over, we don't trade over. So as this thing's pulling back, what's going through my head is we're correcting. We're correcting until we trade over. Once we trade over, I'm going to look for it to close over, right? There's always like a series of steps. And then here, we don't just trade over, we close over, we go higher, we don't go lower, we don't go lower, and then we go lower. And then we close lower. So now we're going lower. Now we don't go over. Here, just barely, all right? Just for a nanosecond. Here, we're lower. Here, we matched it to the tick. So this whole conversation comes up when you're, every morning I start the day and I'm drawing these lines to identify key points where we have multiple points going together. Then I look at where's yesterday's pivot. That's the dotted line. Then I'm going to look at the opening range. Then I'm going to look at, do we have a trend with that lower high? We certainly do. We even have lower lows every day, so it's even more compelling. And now, if we're over the pivot, I can start to say, okay, maybe we could head higher. If we get over the opening range high, okay, maybe we're heading higher. If we get over the prior day's high, all right, now we might start to change some momentum. If we close over it, now we've got a reversal. And
go ahead.
Look at the 5-minute today. Here's where we opened at 9:30. We just took off. And when I'm looking at this, I'm just saying higher, 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 hiccup, but then right back up, hiccup. Now lower, 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 lower. It just repeats. It's just, I mean, you don't normally get something that looks this symmetric. But this is the thing. Like, if it's trending, that pattern will exist, and I look for it to change.
Interesting. Very, very clear, very concise. And so I just got a question, and I know you and I have been working on our secret formulas and stuff. Where is your daily pivot for today in the S&Ps?
I'm using the 24-hour market, so I'm using that same pivot I think that you're using for you refer to it as Globex. I'm assuming that my data is the same 24-hour data yours is.
Okay.
And look at the line today. One of the reasons that I would be looking for the market to start heading higher was, look at how it has responded to yesterday's pivot, which is that dashed line. It's been pretty significant.
I think I have it a little bit lower. You have it at what?
I have it at 66.43.
Okay.
And that would be based on, if I go to the daily chart, it would be based, remember, this is the deck futures.
Right. Yeah.
Are you doing
That's
cash?
what, yeah. Because well, we're splitting hairs here because I don't know, mine came out at 47.50, but I just want to check that real quick. We had a high of 708.75. We had a low of 594.
Yep.
And then we had a close at 639.75.
Yeah.
Yeah, mine comes out to 47.5. Maybe you took the last. I bet you I know what you did. You probably took that last tick at 5 o'clock as opposed to the mark. I go to the mark. But,
I don't. I'm doing whatever TradeStation did for me.
Okay. Well,
So
okay. Let's.
Yeah, actually, what do you have for your close?
39.75.
Yeah, I have the same data, so I'd have to look to see why my calculation's wrong.
Okay, no big deal. We spent a lot of time on that. We can move on. Macro picture. Last week was last week. I wasn't here, but let's move on to what could affect things this week. What is the theme and focus this week? And the only thing we have to say is NVIDIA.
Yeah. NVIDIA, so if we stick with tech, but to focus on what probably comes next in the conversation is the healthcare or biotech or pharma. So yeah, everybody's focused on NVIDIA for good reason, but everybody's buying pharma. So we're all talking about NVIDIA, but somebody else is over there buying Lilly and Johnson & Johnson. Guild looks good too, Gilead. But let's come back to that later, because the story definitely is tech. And I don't know why the market rolled over, but I did feel like in the morning I was a little surprised actually that the market was as strong as it was. I thought we'd be kind of choppy because of NVIDIA, but then it seemed like the Saudi conference might have gotten everybody excited because SMH was so strong. Everything was strong. Everything, like a lot of the AI names, data center related AI names were strong. So I was thinking AI, the Saudi thing might have gotten everybody going, and then it just kind of rolled over.
Okay. All right. So NVIDIA, do you want to drill down on some technicals on that?
Yeah.
Before we move on, we'll
do
a
sure. So I don't have any insight into the fundamentals of NVIDIA and what they may bring. My feeling, though, from just a trading perspective, is the good news is it's sold off and it's sitting on the 50-day moving average. It's not sitting at the 52-week high. Despite that, though, I just don't know what Jensen could possibly say that would really get everybody so excited. That's new. So I feel like the risk is actually to the downside. I don't know if it's still there, but I heard yesterday or the day before that options were pricing in somewhere between 6 and 8% move. Do you know what they're pricing in? And then that's about the average for the last 8 quarters. So my feeling is there's no point in placing the bet that it's going to have a huge upside. I feel like nobody's going to get surprised to the upside. They're only going to get surprised to the downside. And that's not a bet that it's going to go down. It's just my risk meter says the risk is to the downside. That said, I don't think the risk is that it's going to upset the whole apple cart here.
They're pricing in, as you said, 6 to 8%. I'm just looking at the closest strike right here is the 185 where we're trading, and that comes out to about $13. And my sentiment this morning was the same. Let's say we close here 184. I would be palms out at 197. I mean, there's no doubt. I just would be selling the rip if it comes, and a lot of times it's off that headline number. Also, you've had a clean, that would take you up to 190. If we close at 185, that would take you up to 198. Also, I think some people are maybe stuck here, not regretting not selling in the 200 handle. You basically have had a move from 212 down to 180. So that's a 32-point move. That halfway back of that is 16. That takes you out to the 96, 97 level there. A lot of confluence. And, I love that, if the longs are looking for something, obviously that would be a great target on the upside. I'd be less inclined unless I had some shorter term options, some puts that I wanted to cover. Down 13 from the close, working on a big red candle for the month. So I think I share your sentiment here on NVIDIA with the earnings, and the overall effect it will have on the market remains to be seen. So there's our big theme, our big focus for the week. You touched on it briefly before I threw in the NVIDIA, but the market fundamentals. And one characteristic of this market has been we're selling something, we're buying something. We're selling a little of this, we'll buy a little bit of that. And as you alluded to, the healthcare sector, what was that one ETF that you mentioned, the VanEck?
So PPH.
Yeah.
PPH is the pharma.
Okay.
And I think we may have mentioned this 2 weeks ago, actually. But so if we actually, if I show my screen,
go
again. This is how, and I'm going to do weekly. This is the actually, you did it. Okay, great. So here's PPH weekly. So forget about don't even have to pretend that you know what this thing is. If you look at just pretend you're at the eye doctor, because I was just there. PPH, and then you got XBI. So XBI, this is the biotech. Like everybody's excited about biotech, and I get it. Like we're breaking out of this base that it's been in since 2022, and that does look good. And that's certainly like before I do this, look at that, right? That's a weekly. Here are the cues. The last 3 weeks have been down. So this is going in the opposite direction. If you look at IBB, which is again biotech. That's gone up in the last 3 weeks nicely. But having said that, it's still kind of breaking out of this base. It doesn't have the same trend as PPH. And then XLV, my least favorite, just because the administration has until recently kind of had its claws in it, is again kind of struggling up here. Now this over 150, I like it. But now let's go back to PPH. And there's really there's nothing to dislike about this except that you're bumping up against 100, big round number, which is where it stopped before. But my point in going through all that is all of those look pretty good in the short term. This one just happens to look better, in my opinion, longer term. And so, and these are weekly charts. I don't trade off the weekly charts. For the most part, I'll trade off the daily charts. If this market's going to fall apart, in my opinion, nothing's going to go up. I mean, when the market falls apart, everything goes down. So if we're rotating right now from tech into these other names, call them safety names if you want, but they're just different industry group, and that rotation turns into selling everything instead of rotating, then that's when I'll get more nervous about this break of the 50. But that's not to say I'm not nervous about it. I am definitely nervous about it. If we talk about the breadth, that's what makes me nervous.
Okay. All right. Good breakdown. I'm looking at this, the PPH as well on my charts, and going with the strict technical analysis, you have distance yourself from the 50-day, which is, stocks do that, and they could do that for a long time. I'm just looking, the move has been higher, and you're having a nice consolidation period. So if I had to pinpoint a level to be a little leery here, I would call it the 98.50 level. And the reason so is you have four lows. I mean, your low today is a little bit higher. But if you go back all the way to the 12th, 98.27, 98.54, 98.46, and 98.33. So I would not be looking for a major breakdown in that until, at least it breached it in maybe not even intraday, but close below it as well. And then, because we haven't had to sell everything a market in quite a long time. Moving on, I believe we get some Fed minutes today. I think another thing that's affected the markets has been the chances of this December rate cut kind of dissipating. I think it's coming down to 50-50. That affects, yields and currencies, commodities. If we want to talk about gold and silver and all, have pulled off those highs, but I think another thing ailing the market, Geoff, has been, concerned over what the Fed's going to do in December.
I think you're right, and I think we're lucky that the Fed came out and tamped down the expectations. Actually, they didn't tamp it down; they pounded it down. Right? Powell came out and said, "Hey, listen, there's no bleeping way that this is 100% chance." And then he sent the generals out, and they talked it down days after that. And the odds went from over 100%, and I don't know what they are now, but probably under 50% they were of the weekend. But I actually think that could be a little bullish longer term, because it gives an opportunity for the market to actually get some good news. There's no such thing as good news when the Fed cuts the rates and everybody expects it 100%. So I was kind of glad that happened. I have no more insight than anybody else on what they'll actually do, but it seems to me that a guy who likes to be consistent is going to cut again, and I don't think there's a whole lot of. I don't think the talk about not cutting is as strong enough to support not being consistent and just cut it.
Okay, let's move on here. Stocks to watch, opportunities and stocks to stay away from, or opportunities and non-opportunities. I'll go with one bullish one here. This Oracle has come a long way down for whatever concerns, the debt concerns. But you're now getting it at a discount to where it had all those good news and the good earnings report. If you're trying to pick a bottom here, of course, it's trading up today. Can lean on that recent low of the move, the 50-day way up there at 276. So if this market is still good to go, if this AI trade is still good to go, I'm looking at Oracle as a potential turnaround after over about 120-point decline from that all-time high made in early September.
So interesting choice. I think you're right. This is probably the stock to watch after the NVIDIA announcement. Because this is at the epicenter of the fear over financing the data centers. This is a little nuance, and I'm not a bond person, but I wrote about this in our weekend thing. The Oracle 30-year bonds got smashed, and that was kind of a tell for the stock. And now it's sitting right on the 200. It's also sitting at the July low, which is a level. We look at the first 10 trading days of July, and you can see them on my chart, and you can see how markets trade around these levels. This is actually where Oracle bounced from in September. This July low was the low, and then it had the earnings. So we're right back to that level. If we break down from this consolidation, this is really ugly. If we rally from here, though, after NVIDIA's earnings, I didn't think about this until you mentioned it. Like, this is probably one of the most sensitive stocks tangentially to what Jensen has to say. So if this thing rallies, I think it would be good news for a lot of stocks. I don't know if it's going to tell you much if it goes down, because it's under such pressure. But if it rallies, I think that would really say something.
Tangentially, is that an SAT word?
Tangentially, yeah. I don't know that I got it right, so you might want to fact check me on that.
No, that's and then I think I'm gonna steal one here out of Triple D's book, and I believe he took a swing short at it this morning. Walmart here. This lost the 50-day movie. The only bugaboo with Walmart here is it has earnings coming up soon. So I don't know how you want to play it into earnings. But just, Walmart, just unbelievable run off that April low. Put in some work in above 100, still holding 100, but $3.50 below the 50-day moving average here. I think that the same thing with what was it like with NVIDIA, and we'd like to try and Geoff, I know you know about this. Like these institutions, when they're peeling out of stuff, and they want out at 200 and something like NVIDIA, they're like, oh, we'll let it trade. We'll let it trade to 205. We'll let it trade to 210 or so, and then they'll come in with their size for a period of days. Well, if you want to make that equation to something like Walmart here, you had a long time to sell this thing over $100, right? Better over a month or so, and going up to like 107. So those key numbers, those double digits, triple digits, that's what I'm looking at. That would be the chart on weakness that I'd be looking at. And also, you can't be happy with the Target numbers today. Yeah, we made some nice calls off the open, off the rally and stuff. But hey, you know what? It just missed Friday's high. I mean, what's this telling you about the consumers? So there's something I like, something I don't like.
Yeah, Target is just no pun intended, but that the Bears hit the bullseye right there for a long time, man. I can't even get near that. Interesting point about I like the look at Walmart. I didn't notice it. I think people can see the screen. Your point about 100. If you look at the 100 price level, and I think most people know this, but if not, this is so like 101. Everybody should know how important these round numbers can be. And when the markets respect these round numbers, you got to watch them. I mean, look at this 100. It was important back here. It was important here. It was important here. July, this is the July high was basically around 100. Then this is the month that you're talking about. So if it breaks 100, bad news, right? That's what you were saying?
Yes.
So I decided, let's go look at Costco, because that one, that one's had a little bit of trouble too. And if I could spell COST, and look at 1,000, right? That's the big round number. So that's where it peaked here. Then it got up. Then once it gapped below, that was the end of it, the end of 1,000 for a while. Then it got up around over 1,000, kind of probably doing the same thing you were saying about 100, right? They could sell it over that, but it couldn't keep going. And then once it got over 1,000, back under 1,000, sold off, came back up to it, couldn't get through it. So if you want to know what Walmart's probably going to look like if it gets under 100, look at Costco's performance once it got under 1,000.
Okay.
Again, keeping it simple. If you want to be long Walmart, don't be long under 100. Wait until it gets over 100, 103, 105.
Yeah, how many times does that save you? Like, not trying to buy things on weakness, but wait till it establishes strength here. Okay, we got about a minute or two left here. I don't know if there's any individual stocks that you want to bring up, but I think we've done a pretty good job with our education for today. You pointing out some good things about the prior day's highs, and also incorporating that into a little bit shorter trade, shorter time frame with the 5 minute, as far as trading above that previous high. So I don't like to drill down on anything less than a 15 minute, but
any time frame. It just works. And it works because you're only using it when the trend has been established. But there is one stock that I want to leave people with. Not that you have to buy it today, but Google. So Google exploded this morning, and I think it exploded because of the Gemini 3 that just got dropped. I mean, when I say dropped, just got released.
Yep.
The stuff that thing does, I've only had a little time to look at it, but my tech guy immediately wrote me, sent me a video. He's like, "You're going to love this." He said, they just completely leapfrogged a lot of technology. And the other thing that I heard right before we came on is Google's done all this with their own chips. So even though they are buying NVIDIA chips, they're not just catching up to everybody. I think they're ahead of everybody, and I don't think people realize it.
Do you know who took a stake in it earlier in the week?
Some old guy. I don't really remember his name.
Yeah.
I don't know if he's still the guy making the decisions. He
didn't pull the trigger on that. And you know what? The other thing about Google too is it trades at a reasonable valuation.
It's just getting started. The Europeans or the US, whoever was suing it, did everybody a favor because they kept everybody from running into this thing, and now it can play catch up. But it's not just this thing probably has the best autonomous driving cars. They've got quantum computing. They've got AI. They've got chips. The problem is that everybody looks at them like all they are is search. And it's so not true. It's so not true. And now the market's recognizing it.
Okay, Kirk, we're going to go overtime here. Kirk, a faithful listener in the Stock Trader Network room, is asking about the U.S. dollar. I look at the dollar futures here as my proxy, and what I'm seeing here is you're running into a little bit of problems here at par. Right at 100. Your high today is 100.05. You peaked just above that in November 4th and November 5th. So I think you've established your bid at 99. You break out over 100, establish a bid on 100. I think you got some room here on the upside on the dollar. What's your take on what's your proxy for the US dollar? And could we go UUP as well? Give us your thoughts on the buck.
Can I show my chart?
I am gonna.
Thank you, Kurt. Thank you, Kurt.
I
haven't really been paying much attention to the dollar, and I should have been, because we talked about this pattern last week with end phase, which has since made a new low. It didn't go back higher, but the pattern still exists. But the pattern is that this indicator here, this momentum indicator at the bottom, let me get rid of this one. Let's make this one bigger. So this blue line is 50-day average of this real motion momentum. The green line is 200. This has already turned positive, and this has not turned positive. And that's a divergence, like same definition of a divergence you'd get with any other indicator. When you have a divergence like this and then you break the 200, that's when that divergence kicks in. And you not only have that kicking in at the level you're just talking about, that's going to be breaking out of a base, and you've got real motion bullish divergence. I love this chart, and I don't say that lightly. This thing's been hated. The whole debasement trade has become popular, but I like it. If this breaks the 200, this is a major bottom. Made a new low. This held the 50. This is a classic momentum divergence that has been going on since the bottom in July. So I am bullish the dollar. I don't know what that'll mean for the gold bugs, but yeah, I like it.
Okay, yeah, you're right. Well, I do have the dollar futures just breaking above that 200 today. All right, Geoff, another great segment here. We're slipping into the red here on the S&P futures. We just went right on the session. Not a good day for me, being a little bit early, and now coming back in the red. I've turned. I'm with you, Geoff. I think this market is going to have a hard time going higher. We won't get that flush until, as you said, is that sell everything market. If you get the healthcare sector to roll over. But another point I saw from a gentleman I follow his notes was, what, if money managers too, you got to think about things from a money manager perspective. We all manage our own money. Been one hell of a year off that April low. I mean, and there's a lot of gains, and I think that the big money is going to be more inclined here to take money off the table than trying to put things work into year end, and that's what the price action is dictating so far here. So, unfortunately, we will not be able to do one of these next week unless we adjust today. We got a lot going on here in December, but thanks, Geoff. Informative session here. We got, maybe come up with a name. Maybe we'll have the chat come up with a name.
Yeah, you reminded me that we didn't have a name. Yeah, nameless.
Nameless. To be named later, right?
TBD. Yeah.
Okay. All right, Geoff. We'll be touching base. Thank you, everybody, and sit tight. We'll have a CC Legator on at 1:30 with the Brentster.
All right. Thanks a lot, everyone. Bye.